This is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech under pressure. Asian equities pairing gains as Korea's SK Hynix prepares for its $29 billion US debut this week. Elsewhere, President Trump gets set to join the NATO summit in Turkey after calls with the leaders of Russia and Ukraine as the two countries exchange new strikes. Plus, landing at the fifth attempt. Budget airline EasyJet agrees to a takeover by Castlelake after the US investment firm ups its offer again to more than £5 billion. Well, a very good morning. Welcome to a new week. Lots of geopolitics and M&A to bring you this hour. Here is the picture in markets as we kick off Monday. A choppy session in Asia. The Kospi having led the retreat, but the broader index back in the green now. Just. European futures tracking lower, so now we're flat. And stateside, we are higher for futures because we've had, of course, the 4th of July break, so playing a bit of catch-up there. Now, in your cross-asset picture, we have oil weaker this morning. Brent down 0.3% at $71 a barrel. This, as flows through the Strait of Hormuz persist, and after that OPEC Plus meeting over the weekend, ratifying its planned oil quota hike. But bond traders bracing for a heavy week of Treasury auctions and the Fed minutes for June. The yield on the 10-year Treasury yield now at 4.46, down 2 basis points. And you've got the Bloomberg Dollar Spot Index edging higher, still factoring in that softer than expected jobs data, as well as Fed Chairman Kevin Warsh in Sintra saying that inflation has eased. Now, what are the risk events on the agenda for the week? Tomorrow, we have the NATO summit, as I say, kicking off in Turkey. President Trump arriving for a meeting with Turkey's Recep Tayyip Erdogan before a meeting with Ukraine's Volodymyr Zelenskyy on Wednesday. On Wednesday, we get minutes of the first Fed meeting led by Kevin Warsh as chairman. Be interesting to see how that shake-up of communications extends to the minutes and also any clues as to how that good family fight, as they put it, over rates played out. And then on Friday, we get what could be the defining risk event of the week. SK Hynix set to list in the US, the biggest ever first-time share sale by a foreign company. So a busy week ahead. Let's get you started. We begin with stocks in Asia pairing gains as a tech rebound loses momentum. Let's go straight to Avril Hong in Singapore for an update. Avril, I'm looking at the Kospi weaker this morning by 0.8%. What are you focused on?
Yeah, I think it is South Korea that is once again in the spotlight as Asia's stock rebound runs into a bit of a wall. It was green in the screens early in the session, tracking what you saw on the US stock futures, extending the Friday rebound, but things are stalling now. I think this speaks to the sense of investor caution of whether this AI rally has just gone too far, and South Korea is the one that is underperforming today. Flip the board. Aside from that, we also had, of course, NVIDIA partner Hon-Hai with a beat in revenues, but the gains look pretty marginal. SK Hynix, ahead of that US ADR kickoff on Friday, has been choppy all of today as well. Now, for the likes of Samsung Electronics, you're hearing that they could be hiking on average the prices of its DRAM by about 20% this quarter. I think this speaks to the pricing power that these memory players really have, but it has to deliver in terms of earnings tomorrow. 18-fold jump in profits is expected, but think about how the stock has risen 150+% so far this year. Now flip the board again, take a look at how dollar yen has been faring as well. And today we had a JGB operation which had poor signals for the long end. This is coming ahead of a 30-year auction for JGBs tomorrow, which as some of our colleagues have been highlighting, sets up a poor signal in terms of a negative feedback loop between JGBs and the yen. No wonder we have the likes of Goldman now a more bearish forecast for dollar yen. It sees it at 165 in a year's time, more bearish than the previous 155 forecast. Lizzie?
OK, Avril, thank you for that update. That's Avril Hong out of Singapore. Well, as she mentioned, US futures actually pointing to a positive return from the long Independence Day weekend. We can speak to Bloomberg MLive strategist Mark Cranfield on this now. Mark, it's a different picture stateside from what we're seeing in the Asia session and indeed in European futures. Why the optimism?
Well, I think if you look back to where the markets were before the US went on its long weekend, so going back to Thursday, the conditions since then actually have been reasonably favourable for US markets. So you would expect a decent start there. Don't forget, even though the Kospi is down around 1% or so today, it rose 5% on Friday. So net, we're actually looking at a decent gain for the Korean market for when the US returns. If you also think about what we've got in terms of data coming up this week, there's nothing very threatening in terms for the US markets. They've got ISM services, we've got the Fed minutes, trade balance. None of that is really going to spring major surprises. If there is a big risk to US markets this week, it really comes in terms of the Treasury auctions, especially the 30-year end. We've seen earlier this year that when 30-year yields rise too quickly, that certainly scatters the market, brings a lot of bears into US equities. So we're going to have a JGB auction tomorrow, as Avery was saying. If that doesn't go too well, it could feed into the US Treasuries. If that auction goes poorly, it could end up getting a negative spiral back into US equities as well. So that is probably the biggest risk event, but that's later in the week. As of today, conditions look reasonable. We would expect a decent start for US markets.
The other big risk event later on in the week, of course, Mark, is that SK Hynix ADRs listing on the Nasdaq on Friday. What sort of impact are you expecting?
Well, it's a bit of an opportunistic situation for the Korean company. They're really doing this to try and raise their value globally, and also because they've got huge investment plans back in Korea, infrastructure mostly. They want to transfer the money back to Korea by the Korean won. That currency has been undervalued for some time. So actually, it will be a net beneficiary to the Korean won that will probably see some upside from the flows that go back into the Korean market from that. The chances of this going badly is really pretty low. I mean, the demand for tech-related and chip-related names in America in particular is extremely high. Almost an insatiable demand. If you look at the way the Micron trades in America, people really want to gravitate towards these kind of deals. It's their first big opportunity to get Hynix in US dollar terms. There seems to be plenty of excess money in the American market. It'd be very surprising if Hynix can't produce a decent deal. Given all that, of course, the big surprise would be that it doesn't go smoothly, and that could bring down the whole market. That doesn't look like the base case scenario at all. It's more about narrowing a differential between Hynix valuation in Korea and potential valuations offshore. Overall, you would expect it to be a positive for markets, especially for the Korean won, who may benefit from the flows back home.
OK, Mark, thank you very much for the preview. That's Mark Cranfield, our Bloomberg MLive strategist. Well, just breaking across the terminal, we do have the hot headline that Thales, which is, of course, the French multinational aerospace and defence company specialising in electronics, is to buy Exail Technologies for €134 per share. The aim, Thales says, is to increase scale in underwater warfare. It's a binding agreement with the Jorge family for a 35.51% Exail stake. Thales expecting the closing of the deal by the third quarter of 2024, planning to launch the tender for 100% of the company. So that news just dropping across the terminal. And, of course, we will keep an eye on those shares and the rest of the defence sector at the European Open. Third quarter of 2027, when Thales expects that closing of the acquisition of the stake. Now, staying with defence indeed and turning more broadly to the geopolitics this week, NATO leaders are due to convene at the military alliance's annual summit tomorrow, starting in Ankara. The meeting coming, of course, after months of war in the Middle East and with questions remaining over America's long-term commitment to the alliance. Let's get more now with Bloomberg's Paul Wallace, who is in Turkey for us. Paul, good morning. Just first of all, talk us through the state of the tensions between the US and Europe this year at the NATO summit.
Hi, Lizzie. They are pretty high for yet another year. Arguably, they're even higher this year because of what we've seen in recent months. We've seen Trump threatening to take over Greenland, which rattled all of Europe and certainly NATO. we've had the Iran war. Now, that has, again, strained relations between the US and its European allies. Broadly speaking, the European nations didn't want the war in the first place. And then when it started to go wrong, they were accused by President Trump of not doing enough to help the US and not doing enough to help reopen the Straits of Hormuz. And this summit also comes on the back of Trump threatening to pull out thousands of US troops from Europe. So tensions do remain high. I would say, however, that Mark Rutte, the head of NATO, and other European leaders, they're pretty used to dealing with Trump now, and they're well versed with making sure summits like this, in which he attends, go well, and that they do go some way towards strengthening the relationship between the US and NATO in this case, or the US and Europe.
Well, given all of President Trump's pressure this time last year, have we actually seen much change in defence spending for NATO members since then?
We've certainly seen talk about it and plans put into place, whether it's from the likes of Italy or the UK. Germany certainly is ramping up defence spending in a big way. It's of course still a big ask whether or not European members of NATO can get to 5% of GDP. That's going to be really, really tough for them, even if you're talking about 3.5% being core defense spending, and then the final 1.5% of GDP being things they're probably already spending on, which they can say is related to defense. It's going to be tough. If you take the UK, which is one of the better, certainly Western European countries when it comes to defense spending, they're only just over 2.5% of GDP. So getting to 5% is going to take years. And this all comes at a time when European nations are under big financial strains, they've got big fiscal problems and high debt levels. So certainly it's going to be problematic for them. But I think at the same time they are going to have to reassure Trump that they are serious about getting there, because it's something that he's not going to let go of. He really, really does believe that they need to up their defense spending, and that 5% target is something he takes very seriously.
And Paul, we know that the war in Ukraine now has gone on longer than the First World War. Could we see progress towards an end to it at this summit?
I think, according to our reporting and according to sort of most European officials, they're not holding out high hopes that there will be a big shift at this summit. Ukrainian President Volodymyr Zelenskyy is meeting Trump tomorrow, and he will obviously try to get reassurance from the US that it, broadly speaking, backs Ukraine, backs European efforts to fund the Ukrainian war effort against Russia. And, Trump did speak to Vladimir Putin on Saturday. So Zelenskyy will look to put his points of view across and make sure that Trump doesn't, if you like, have the ear of Putin so much.
OK. Paul, we look forward to all of your coverage of the summit. Thank you so much. That's Bloomberg's Paul Wallace. Well, still ahead on Daybreak Europe, shipping in the Strait of Hormuz shows signs of recovering days after unexplained U-turns and detours. But first, a turbulent ride ends after UK budget airline EasyJet agrees in principle to a £5 billion takeover offer. We'll discuss whether US firm Castlelake can land the deal. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. Now, let's turn to all the M&A that's happening this morning. The UK budget carrier EasyJet has agreed in principle to a takeover offer from US firm Castlelake, worth more than £5 billion. The beefed-up offer was Castlelake's fifth after the two sides sparred over several weeks. So let's get into the detail now. We can speak to Bloomberg aviation and transport reporter Danny Lee. So, Danny, it feels quite like Castlelake's taken advantage of the situation surrounding EasyJet, the Iran war, higher jet fuel prices, and finally this seems to be getting over the line. Tell us more.
Yeah, Lizzie, good morning. Well, it really does take two to tango. And as you said, this time EasyJet has accepted, in principle, an offer from Castlelake for the right to buy it. And, this is the fifth offer over several weeks. And, whether this is Castlelake taking advantage, it's certainly not necessarily buying it on the cheap. And this time, the offer from Castlelake is around 690 pence a share. That gives it a valuation of £5.2 billion, or just shy of $7 billion. Analysts and investors had been expecting for something or hoping for something more like 700 pence a share, so it's slightly shy of market expectation in some regards. But it really is going to be key to see how this unfolds, given where the shares may trade this morning, and the valuation right now is the market cap is around £4.2 billion. So there is still huge upside for the shares to pop this morning. But as we have seen over the last several weeks, the fact that EasyJet had previously said Castlelake's approach was either highly opportunistic and therefore was them trying to buy them on the cheap. It's not necessarily been an easy time for Castlelake, as it had to put in multiple bids.
So this isn't quite over the line yet. What needs to happen for the two sides to land on the deal, Danny?
Well, for Castlelake, it now has a final deadline extending this put-up or shut-up offer until August 3rd. And from there, it can go from then. The EasyJet board could formally accept the bid and then recommend the offer to its shareholders. Key to that will be the single largest shareholder, the founder of EasyJet, Sir Stelios, and his family, which own roughly 15% of the airline. They've said nothing so far of the approaches from Castlelake, so it'll be key to see how they react. But overall, it's a really fascinating time for the aviation industry, particularly in Europe, for the airlines and M&A. We've seen a number of airlines be taken over. The fact that Lufthansa has taken control of Italy's national carrier, ITA. We've also seen SAS go to France KLM, which Castlelake had a huge role to play in. And then also TAP Air Portugal. That is now on the docket between Lufthansa and Air France as well. But it does remain to be seen the future of EasyJet, because Castlelake does need a partner in all of this. And it does remain to be seen who may step up to that. And therefore, whether EasyJet, because of its attractive size, its assets, including having over 350 aircraft and over 400 on its order book, and some attractive landing slots at European airports, whether it can remain as one or whether it could be broken apart.
So it may take three to tango, in fact. Danny, thank you for the update. That's Bloomberg aviation and transport reporter Danny Lee, and indeed we will watch those shares at the European Cash Open. Now, let's turn to some other M&A news this morning. Crédit Agricole has raised its stake in Banco BPM to 29.3%, strengthening its position in Italy's banking sector. The French lender said that it had increased its stake from just under 23% through market purchases and a derivative instrument as well. Crédit Agricole has been raising its stake in the Italian bank for several years now, as it looks to defend its interests in Italy, with Banco BPM looking to merge with rival bank Monte dei Paschi. And elsewhere, Sky News reports that British retailer Next is considering a takeover offer for upmarket department store chain Harvey Nichols. The report says talks are at an early stage, and it's unclear whether Next would keep Harvey Nichols' regional stores open. Harvey Nichols owner Dixon Poon has been exploring options for the chain, including a sale or new investment partners. Well, coming up on Daybreak Europe, signs of recovery in the Strait of Hormuz. So we'll check how oil markets are reacting this morning. Currently looking at the Brent price down 0.2% at just shy of $72 a barrel. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, we are seeing some live pictures coming from Tehran, and this is the Iranian capital, of course, where the funeral for the late Supreme Leader Ayatollah Ali Khamenei is continuing. He was killed on the first day of the Iran war in February, and some 20 million people are expected to attend the week-long mass funeral. His casket will be taken through the streets of several holy cities over the next few days before being buried in his home city of Mashhad on Thursday. Well, turning to oil now, prices fluctuating after 2 days of gains as crude markets weigh resilient flows through the Strait of Hormuz. Oil and gas shipping showed signs of improvement yesterday after multiple vessels performed U-turns and detours. Let's get some analysis now. We can speak to Stephen Sapczynski, Bloomberg's Asia Energy team leader. Morning, Stephen. How much of a recovery are we seeing when it comes to tanker traffic in the waterway? Are operators still proceeding cautiously here?
I think proceeding cautiously is the right way to characterize this. I mean, we have clearly an increase over the last few weeks compared to where we were before the interim U.S.-Iran peace deal was signed. But we are still far below normal levels. So there was some fears over on Saturday when you saw some U-turns on the Omani route, when there were reports about Iran sending radio signals to ships that they can only take their route and that you must be approved by Tehran to go through, that maybe there will be a reduction in traffic. But really, we're seeing a steady amount of traffic week on week, 20, 30 ships, maybe more if they're dark. But still, this compares very little to where we were in February before the war began. You had 140 ships on a daily basis going through the strait. We're not at those levels. But that being said, seeing this activity, while small, does indicate, this is something that the market is interpreting as a positive sign. It won't be, 100% by very quickly. They knew it was going to take time. And the fact that flows are continuing indicates that there is a level of stability. But you look at this chart right here, you can see we are still quite a ways off. And that's what the market will be looking at very carefully, because if it stays at this level for weeks, months, then the market will remain tight, both in oil and gas. So hopefully going forward, traders and producers are looking at seeing those numbers really begin to increase over the next 2 or 3 months.
And Stephen, over the weekend we've seen OPEC Plus sticking to its plan to raise output, adding more supply when the market's already worried about an oil glut. But how much does the market care about what OPEC Plus does right now, when surely these moves are just theoretical?
Yeah, I mean, surely they can't get everything out at the moment because Hormuz isn't fully open. But it does indicate that they're trying to get their market share, that they want to really ramp up. And they don't want to cede any market share to potentially other producers, especially those in the United States or elsewhere. But let me give you just a little bit of background to give you the macro view on this, right? For much of the last few months, Asian buyers had been preparing to replace Hormuz supply. They weren't sure when that oil out of the Persian Gulf was going to resume. They weren't sure when there would be a peace deal. So, a lot of consumers either cut back, their imports and used inventories like China, or they found replacements like Japan or others from alternative suppliers. So now with Hormuz sort of opening up, with Iranian oil receiving waivers from the U.S. that were sanctioned, they can sell to other countries. With Saudi Arabia and Kuwait also ramping up their output and production and exports, they're coming at a time where the buyers in Asia have already found replacements. So that's why when we talk about a glut, that's what we mean. There is already, these folks are already accounted for. And so in order to sell the oil that's being sent out of Hormuz, there is a discount being offered. And so it will be interesting to see how OPEC Plus continues going forward. Obviously, August will be an increase. After that, it will be quite interesting to see whether or not they continue that trend.
Really helpful context. Stephen Sapczynski there, thank you very much. Well, coming up, we'll dive into the geopolitics. President Trump speaking to the leaders of Ukraine and Russia. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech turbulence. Asian equities pairing gains as Korea's South SK Hynix prepares for its $29 billion US debut this week. President Trump gets set to join the NATO summit in Turkey after calls with the leaders of Russia and Ukraine as the two countries exchange new strikes. Plus, landing at the fifth attempt. Budget airline EasyJet agrees to a takeover by Castlelake after the US investment firm ups its offer again to more than £5 billion. Well, a very good morning if you are just joining us. 6:30 a.m. here in London, and this is the picture in markets as we kick off a new week. A choppy session in Asia. The MSCI Asia Pacific Index now back in the red, down 0.2%. The Kospi, as I say, leading the retreat, down 1.4%. And futures here in Europe tracking lower, down 0.2% for the Euro Stoxx 50 futures. But when we look to the US Open, actually set for a positive session. S&P E-minis up 0.25%. Of course, we're catching up after the 4th of July break. Now, when you cross asset picture, we've talked a lot about oil already in this programme. Flows through the Strait of Hormuz persisting, and Brent is now weaker, 0.2% at just shy of $72 a barrel. Also factoring in that OPEC Plus meeting over the weekend, ratifying the planned oil quota hike. Then if we also keep going on the cross-asset picture, just flip the board over so we can check in on what's happening in your bond space. In the 10-year yield, we're down a basis point at 4.47 as things stand. Of course, it's a big week for Treasury auctions, and we've got the June Fed minutes coming on Wednesday. Just finally, we've thrown in the yen here because we have seen it actually falling to 161 per dollar, just shy of 162. Goldman eyeing the 165 level. And in fact, interesting moves at the long end of the Japanese yield curve. The 10-year rising to 2.82%, up 4 basis points. And this is the highest since 1996. So that's what's happening in your markets. Let's turn to your front pages as well now. The Financial Times this morning leading on its interview with a senior official at the Financial Conduct Authority who's warned of an arms race for regulators to keep up with the use of AI in financial services. So focusing on the UK for the FT. Also on the front page of the Telegraph in England, all focus, of course, on the football. Well done if you stayed up to watch that game, but leading with a headline describing the country's win over Mexico in the World Cup quarter-finals as the best victory since England won the competition in 1966. I'll let you be the judge of that. And then we turn over to the Wall Street Journal, leading on its description of an emergency meeting of European leaders earlier this year, with discussion of how the continent could manage a breakup with the US amid all of these concerns, of course, over the Trump administration's threats against Greenland. So that story setting us up for the NATO summit. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Well, let's dive back into the geopolitics now. Ukraine says that it attacked 16 power sites in Russian-occupied regions over the past 48 hours, deepening an energy crisis. Russia also reporting that it carried out strikes on Ukrainian airfields, infrastructure and drone production sites over the weekend. Now, the exchanges took place ahead, as I say, of this upcoming NATO summit in Turkey. And we can get more now from Bloomberg's Anthony Halpin, who leads our coverage of Russia's economy and government. Tony, good morning. Just bring us the latest on these attacks.
Yes, overnight attacks from Russia against Kiev and other areas of Ukraine. Ukraine says 11 people have been killed and at least 46 wounded in these latest attacks, which follows ones last Thursday in which 30 people were killed. So it's all part of a rather depressing pattern of Russian intense strikes against Ukraine to try and undermine morale, Ukrainian morale. Ukraine, of course, is striking back, targeting things like oil refineries, fuel depots, and energy infrastructure in general to try and make it much more apparent to ordinary Russians what the cost of this war is, and it's leading to fuel shortages, long lines at petrol stations. And as you've noted, they've been attacking energy infrastructure in Crimea as part of a strategy mainly to try and isolate that peninsula and make it much more difficult for Russia to hold on to.
And of course, we've got the NATO summit coming up this week. It was a topic of discussion between Presidents Trump and Putin on the phone. What more do we know about what was said?
Yes, they had a discussion on Saturday which covered Ukraine. President Putin, of course, was quite keen to influence President Trump's views before The US president goes to the NATO summit in Ankara. He's due to meet Ukrainian President Zelenskyy on Wednesday for talks about the war. There's no real sense that diplomacy is bringing the sides any closer to an agreement or even getting around the table to negotiate an agreement. But clearly, Ukraine wants to try and gain support from President Trump, in particular for things like air defenses. And the Russian side are very keen to influence Trump's view so that they don't feel that they are in some way losing out. The US side said that after the talks between Trump and Zelenskyy, it may be that the US president also again talks to Putin. So there's a lot of telephone diplomacy, a lot of personal meetings, but at the moment no real sign that there's a negotiated settlement that's anywhere near close to being signed.
OK, well, we'll watch that meeting between Trump and Zelenskyy with trepidation after what happened in the Oval Office. For now, though, Tony, thank you so much. That's Bloomberg's Russia EcoGov team leader, Anthony Halpin. Well, when NATO leaders do arrive in Ankara tomorrow, the Turkish President Recep Tayyip Erdogan is going to be expected to tell them how vital his country is to the military alliance's future. With relations across the Atlantic deteriorating, as we say, Europe's increasingly finding out how useful Turkey can be. I'm joined now by Bloomberg's Flavia Kraus-Jackson for more. Flav, good morning. Just 2 years ago, It doesn't seem that long ago, but Erdogan was the black sheep at NATO. How much clout now does Turkey have within the alliance?
Yes, I mean, a lot has changed. If you look back to 2024, when he was the holdout resisting Sweden's ascension into NATO, it really feels like we're in a different world. And I would say that for Rutte, the Secretary General, it's a good thing that it's Turkey's turn to be hosting NATO this year. If it'd been anywhere else, like say Italy, I doubt Trump would be showing up. So Turkey is in a very interesting position, obviously geographically and strategically, because it can it can use its clout both in the situation in the Middle East, given its relationships and its placement there. It's notable that the Syrian leader is going to be attending, and that's going to be something also that Trump will be very interested in. And also, I mean, it's one of the few militaries that actually has kept spending, right? It did not need to be told off to be spending more. It's the second biggest military in the NATO alliance after the US. And the main thing for Erdogan is that he's hoping his diplomacy yields to something. He's hoping that the Americans will lift their ban on the F-35s. And Trump has indicated that he's willing to give Erdogan a little present. So let's see if that happens here in Ankara.
Well, of course, more broadly, the focus of this year's summit will again be dollars and deals to try and woo President Trump. Flav, I was speaking to a top NATO commander on Friday. He was saying that Europe has replaced most of the US cuts within NATO. Let's just take a listen.
European allies have definitely stepped up in terms of backfilling the adjustments in the US forces in Europe. And I think, importantly, you are seeing this as a real demonstration, not just of stronger Europe in a stronger NATO, but this is absolutely NATO nations building the NATO 3.0 that you may have heard a number of people talking about over the last few months.
So, Flavia, on top of that foundation, what do you expect Europe's approach to be to Trump this year? Will it be different to years past?
Yes, it will. I mean, I think last year was all about the survival of the alliance, right? And just literally doing anything anyone could to stop Trump from walking out. Now, he still threatens to do that routinely. And, you know, he's got different ways in which he's sort of taunting and testing. But this feels more like a NATO, unless things go off track, which, let's be clear, is always possible, about consolidation. All the different European nations have stepped up. There is more military money, money for the military sort of swilling around. It's how to spend it. So it's, I think, very much about building that position. One thing that I think is incredibly interesting and telling is that Trump is quite cross with a few European countries because, in his view, they didn't let him use the US use military assets and airspace to go and attack Iran. Now, of course, Iran falls outside the purview of NATO, but it's very much in the conversation. And it's something that Trump also sort of said he wanted. So it's interesting also to see how the scope of how the summit is being held is changing very much to adapt to its biggest spender.
OK, Bloomberg's Flavia Kraus-Jackson, thank you so much, and we look forward to the team's coverage throughout the rest of the summit. Now, let's turn to some other top geopolitical stories we're following for you this morning. Italy's Repubblica newspaper is reporting that the country may raise military and security spending by about 17 billion euros over the next 2 years. The plan would lift costs to about 3.4% of GDP in 2028 from 2.8% now. Prime Minister Giorgia Meloni is preparing to take the pledge to this week's NATO summit in Ankara as Italy aims to move closer to the alliance's new 5% target by 2035. Elsewhere, Germany now plans to increase net new borrowing to 118 billion euros in 2027, around 7% more than projected in April. Sources in the country's finance ministry say that the increase reflects weaker tax revenue, higher debt servicing costs and more funding needs for unemployment benefits. The cabinet is set to approve the 2027 budget today, alongside a package of reforms covering pensions, healthcare and taxes. And Israeli Prime Minister Benjamin Netanyahu says that he'll meet with President Trump in the US in the near future. The Prime Minister's office said that the two leaders spoke on Friday, with Netanyahu congratulating Trump on the 250th anniversary of the signing of the Declaration of Independence. Axios reporting that Netanyahu asked for a White House meeting as soon as this week, once Trump returns from the NATO summit. Speaking to Fox News, Netanyahu said that his relationship with the US president is strong.
Deal or no deal, as long as I'm Prime Minister, Iran will not have nuclear weapons. We've been very lucky that President Trump is leading the United States, leading the free world in this common effort. And believe me, if I have things that I want to point out to him and bring my own opinions, I do so in a free way. And when he has things he wants to tell me, he does that in a free way too. That's what friends and allies do with each other.
So those are some of our top geopolitical news stories this morning. Well, coming up on Daybreak Europe, from chocolate to Barbie via tech giants like Microsoft, we're going to dive into Bloomberg Intelligence's 10 companies to watch. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. Well, as AI exuberance pushes big tech to new heights, Microsoft seems especially unloved at the moment. That's the take from Bloomberg Intelligence, which thinks the software giant's better positioned in AI than the market believes. The analysis is part of Bloomberg's 10 companies to watch for the third quarter, which includes everything from chocolate to Barbie. Well, joining us to walk us through it all now is Bloomberg Intelligence Global Chief Content Officer Tim Craighead. Tim, it's that time of the year. Let's do this again. Starting off with Microsoft, why do you think the market's wrong?
Yeah, it's an interesting situation for Microsoft, and I'll just add to what you said right up front. This is 10 companies that we specifically think have catalyst ahead in the third quarter to change the market view. They're all part of our broader list of focus ideas. There's about 160 of these. You can find them on the terminal at BI Focus. But these 10, with Microsoft being a case in point, high conviction view, different from what the market thinks. And the issue with Microsoft is simply that it's trailed, along with a whole bunch of other software companies, this whole tech boom. You've got the big hyperscalers, you've got the chip companies that are all flying high. Microsoft is off significantly from its high, and it's because the market is quite concerned about them being disrupted. We think that they're still one of the leading, if not the leading, LLM cloud providers. They've got a new Office suite that comes out in the second half that will be driving revenue as well. We think they're set for positive surprise. OK, so I'm just flicking through this list now. I don't see any LLMs or semis on the list. Do you have
Any other AI plays?
Yeah, it's interesting. You know, this time in this build out, we're looking for sort of the hidden AI plays, right. The quiet wins. There's a company on the list called Halma, which is a UK-oriented electrical equipment producer. One of their divisions makes a product called photonics, which replaces copper in data centers. It makes things much quicker, less latency, etc., big bandwidth boost. We think that this is driving better than expected revenue ahead. Telecom Malaysia also is another example. Singapore has been a hotbed for data center build out in Asia, but they're running out of space. Next door across the channel is Malaysia. They're now in the midst of an AI build out boom, and Telecom Malaysia provides a digital infrastructure, all of that backhaul capability and whatnot. So both of those are interesting AI plays.
Yeah, Halma's been a really interesting company to watch over the years. Just a steady gainer, but then a huge drop earlier on this year.
Yep.
One to watch.
Yes.
Right, finally, let's just talk about chocolate and Barbie. Yeah. You've got Barry Callebaut and also Mattel. So what's going on with those two?
Yeah, you know, these focus ideas, these 10 companies to watch this quarter aren't all positive. 4 of them this quarter actually are negative, cautious views. Barry Callebaut is a cocoa producer, and what we have found over the last couple of years is that chocolate makers are tending to use less and less cocoa to make their chocolate after the big spike in cocoa prices a couple of years ago. We think that weaker volumes are likely. They're also at risk of El Nino raising cocoa costs to them, which is a margin squeeze. And Mattel is interesting. You know, one of their biggest businesses is Barbie. There's a shift in the last year or so that's continuing apace, moving more towards building sets and trading cards as far as toy purchases go. And dolls, we think, are set to disappoint after a big boost the last couple of years on the heels of the Barbie movie. That's now sort of played out.
Okay, well, we're going to need Ken the sequel, I think. Tim, thank you so much. That's Tim Craighead from Bloomberg Intelligence. And as he says, you can find that list at BI Focus on the terminal. Well, now let's turn to some of the top stories we're following for you this morning. The US star striker Florin Balogun will be allowed to play against Belgium after FIFA reversed his one-match ban. Bloomberg understands it follows a phone call between President Trump and the FIFA boss Gianni Infantino. Balogun was given a red card in the match against Bosnia-Herzegovina. Belgium's team says that it's astonished by FIFA's decision and is reviewing possible options to appeal. And we've already mentioned it, but Jude Bellingham scored 2 goals 98 seconds apart, and Harry Kane converted a penalty to help England win 3-2 against Mexico. England went down to 10 men after Gerald Cancer was sent off, but Kane's penalty was enough for the win. Earlier we described the game as a quarter-final, but it was a round of 16 game, with England now through to the final 8. President Trump also took to Truth Social to describe Harry Kane as a great player after the match. England will face Norway on Saturday in Miami for a spot in the semi-finals after Erling Haaland's 2 goals fired his team to victory over Brazil. And away from the football, tennis legend Rafael Nadal has left the tennis court for a career in business. The 22 Grand Slam champion, who retired in 2024, has built his post-sport life around the expansion of his hotel brand, his tennis academy and foundation, as well as a supplements business as well. In an interview on the latest episode of Leaders with Francine Lacroix, the podcast, Nadal says he does not miss tennis after pushing his body to the limit.
I am not the kind of person that like to wake up every morning and don't know what to do. That's as simple as that. I need to have goals in my life. Even if I am very lucky and I could decide to do other stuff, just stay at home without plannings. But I don't understand the life that way. I am enjoying this process. And yeah, it's intense but interesting.
You played tennis for 23 years, 11 months a year. What do you miss about it the most? Do you miss it?
No, not now.
You don't miss it?
I always will be very thankful to tennis for all the experiences that I
Listen to that episode now wherever you get your podcasts, and you can also catch it on Bloomberg TV later on today at 10 p.m. UK time. Plenty more coming up on the programme. We'll bring you some terminal charts to frame your week ahead. Stay with us. Good morning from London. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:55 a.m. here in London. And here are a couple of terminal charts to frame your week ahead. Starting off with, of course, the Fed minutes. Kevin Warsh's first meeting as chairman in the past, and now we're looking ahead to the minutes on Wednesday. But he's already winning on one key indicator, and that is break-evens, short-end break-evens, breaking below that 2% level. And notable that we're in the bottom now of a 5-year range, as you can see, going back here at a time when you've got a boom in stocks and tech investment. So we're going to watch this rate for signs that maybe a cut could be coming back into the Fed's playbook, especially when you've got the labour market in flux, especially when you've got the energy crisis rapidly being left behind in the rearview mirror. Now, flip the board over, because the other big risk event on the docket for this week is, of course, SK Hynix's US listing. And you can see here how foreigners have been exiting the Korean market. So outflows topping $100 billion since the start of the year. This listing simultaneously the biggest potential reversal of that outflow and a test of whether investors want back in or are simply just rotating from Seoul-listed shares into a more liquid US wrapper. So that coming on Friday, and we shall watch it as well. But to access, search and save all of the Bloomberg terminal charts used in both this show and all the other shows across Bloomberg TV, terminal subscribers can use the function CHRT TV Go. So I mentioned two of the big risk events on the docket for the week ahead. The other one, of course, is the NATO summit. Starting off tomorrow, we'll see President Trump meeting with Recep Tayyip Erdogan of Turkey and then with Zelenskyy of Ukraine on Wednesday. So do we see another car crash, as we saw in the Oval Office, when it comes to that conversation between the US and Ukraine? But tensions remaining over Greenland, over European defence spending, as well as the Iran war. But that does it for Daybreak Europe. Coming up next is the opening trade. Anna Guy and Tom will take you all the way to the European Cash Open. Stay with us. Have a good week. This is Bloomberg.